The Philippine Stock Exchange kicks off trading at 64.34 after underperforming in the region on Wednesday. Now joining us today for her take on the markets and a lot of other business stories, we have ATR Asset Management Chief Investment Officer Sandra Araullo. Good morning, Sandra, and nice to have you again.
Good morning, Stanley.
Okay, let's talk about the latest on the Federal Reserve rate hiking. It has announced it is keeping rates unchanged for now, while two more hikes may be expected before the year ends, probably ending the year falling within the policy rate range of 5 to 5.5% for the U.S. Now, is this any indication now, Sandra, that it might be safe to say recession fears are not a concern anymore in the U.S.?
So actually, there's a lot to digest from the meeting overnight. And to answer your question, it's safe to say that we might not encounter a recession within 2023. But that said, further down the road, it's still a likely scenario because growth remains strong and inflation expectations or inflation forecasts by the Fed has actually been adjusted higher. They need to get that down, so they still need to probably keep policy tight.
Okay, because Sandra, throughout the past months, that sentiment on recession fears in the U.S. has always prevailed. You think it will still matter to a lot of global markets now?
I do actually. There are a lot of narratives that are driving different markets in perhaps contradicting fashion. The rates markets or the bond markets are actually the most in tune to what the policymakers are doing. Even our own market is kind of sanguine, or the Philippine equity markets are reacting to the data and are it's reacting to global data. It's not reacting to our own fundamental data. No, the outlier is really the U.S. market and not even the broad market. It's a very narrow segment of the U.S. market, and if you do a hindsight analysis, the liquidity that's looking for a place to go in this environment has piled on to the very promising AI-related names.
Right.
So that's really what's pushing the market. In fact, about the seven mega caps of the NASDAQ are now being priced at 70 times earnings. So pretty hefty pricing there.
Okay, it's interesting, Sandra, to note that the way the story's been covered, particularly the Federal Reserve hike pause, on the one hand, they're saying the rate hiking cycle has stopped, but there are still two more upcoming for the year. That tilt to hawkishness, is that still a concern, particularly for our own BSP, which has its upcoming June 22 meeting? Now, how much will the policy pause by the Fed influence even our local rate hiking? Because we're still at least one cycle away from the terminal rate of about 6.5%. So there's a 25 bips rate hike there that's in the offing.
I think at least from our perspective, the Fed action is, or at least even the industry as a whole, or managers, economists, it's pretty much within expectations. Even the BSP, I think, has been looking forward to the Fed also pausing this time around. But remember, they've been hiking for the last 10 cycles, and it's a cumulative 500 basis point hike over there. Back home, it's 400 plus basis points. No, so they still need to see how the cumulative hiking has really affected or trickled down to the real economy. There has been some improvement in CPI for sure. In fact, we've seen this inflation here in the Philippines ourselves. In the US, there are some signs of at least an arrest in the upward momentum of inflation, but we're still very, very far from the targets. So that's what's keeping us or what's keeping the policymakers communicating about continued hawkishness.
Okay, now inflation, as you mentioned, still a concern, the driver of rate hikes. And in the Philippines, we of course are in a situation where inflation is going down, but not as fast as we'd hoped for. Now, Nomura, even in its latest release, sees Philippine growth for 2023 falling below 5%, largely from inflation. Do you think we'd ever reach government's target range of 2 to 4% by the end of the year, considering that we barely have 6 months to do that?
We do think we're more likely to reach target by next year.
Okay, so
But the timing of it is not as critical, we think, as the direction. I mean, we don't want to stifle growth in the name of, well, I mean, it's a kind of a give and take. You wanna keep the growth still acceptable, within acceptable levels, while inflation is being brought down.
And what do you think is our finish for the year?
For
For
inflation,
growth, for inflation in terms of reaching government targets, how far are we from maximum, at least?
so maybe we'll hover above the 4% higher end of the 2 to 4% range. But by next year, or at least middle of next year, we should be within 3.5%, we think.
Yeah, Sandra, sometimes it's also difficult to gauge growth projections, particularly you have conflicting projections from various outfits. On the one hand, Moody's came out with its report more bullish over Philippine growth for 2023, which it pegs at 6.1%, outpacing most of our ASEAN peers. Now, what signs are you seeing in our economy that seems to support this?
So the 6.1% does sound optimistic from a relative perspective. Then the narrative becomes slowing growth because we're coming from a higher 6.7 number, no. So again, it depends on the perspective that you take. From a relative standpoint, obviously emerging markets do still have a better prospect than developed markets, and that includes the Philippines. We still have, I mean, we tend to have protracted, shorter term memories nowadays. But we came from a 2-year lockdown, and we only fully opened this year. So there is still some of that pent up demand that's keeping the economy from a growth standpoint fueled. So from that standpoint, it is reasonable to expect growth to still be around 6% for this year. But again, it's coming off of much higher levels, and that momentum from the reopening is definitely going to have to slow down.
Okay, we're bringing in today's opening numbers. We're at 64.30 now. The Philippine Stock Exchange, that's down 0.05%, 10 minutes into opening. Let's talk about the equities market now, Sandra, which strangely is not reacting accordingly to good news. Yesterday, we closed at 64.34, down 0.7%, despite rallies from all of our other regional peers. Technicals-wise, where are we now?
Technicals wise, we're still within the range that we've been on for pretty much the whole year, and even from the last quarter of last year. So we're still looking at the 6,400 handle as being the support level, and it's still intact. You're right. At this point, it's really more technicals driving the markets. I mean, there will still be foreign investors who are looking at the market and who may decide to reallocate elsewhere. And given how small our market is, any kind of movement can bring us in one direction or another. So that's the key point, no? It can bring us in either direction. So again, as we wait out the how things settle for the balance of the year, how the dust settles, and even actually we do think in the US it's either the breadth of the rally improves or something breaks. No, from a risk reward standpoint, in either case, the Philippine equity market, or at least emerging markets, including those that are lagging, like the Philippine markets, can benefit from that kind of windfall.
Okay, so technicals wise, we're okay. What about sentiment? Because current sentiment in the market has changed a lot from the start of the year. We've gone from cautious optimism to just cautious today. Now, what do you make of this doldrum in the equities market, despite most stocks already beaten down and prices are ripe for buying and accumulation?
Yeah, we do think it's still external that's causing the negative sentiment. Again, it's foreign money, foreign flows, foreign managers that are reallocating elsewhere, and that's affecting our own market. The good news is local investors like ourselves are very much picking up the any selling by these foreign managers, because the value is undeniable. I mean, it's 35% discount to fair value. Price to earnings ratios are in the low teens, and the earnings are just there. I saw research the other day that kind of compares earnings surprises, and the Philippines had the highest earnings surprises for the last reporting season. Better than the US, better than our peers. So it's really that sentiment that is keeping the markets depressed. But the good news is sentiment can turn pretty quickly, and when that happens, it's really ripe for a massive, massive correction.
And before that happens, of course, we see a lot of investors just being selective and cautious in the market. In the past months, even just the banks and financials were doing well. They were the favorites. But now the central bank is winding down rate hiking. Are financials still a go-to for investors at this point?
It's quite a crowded trade, actually, and even ourselves, we have been taking profits on the positions that have worked for us in the past year. It's still, from an earnings standpoint, banks do still bring in those results, but I think again now's a good time to rotate towards those laggards and those that have the potential to shine within the coming months and years.
Okay, still on the subject of banks, one issue that might affect the banks, of course, and financials, the BSP's move to increase single borrowing limits, or SBL, which is the ceiling on the amount of loans or credit accommodations and guarantees that banks can extend to one borrower, and that's by 15%. This is a move seen to affect banks. What can you tell us about it?
Oh, we still need to digest that information. Our banking analysts are on that and kind of needing to see how it relates to the other drivers that we're looking for banks. But definitely on the surface, increasing that single borrowing limit also gives the signals, at least signals, confidence by the BSP on risk management mechanisms that the banks have put in place, and that's good news overall.
Okay, let's now take a look at some of our corporate stories. Today, PTNT joining forces with Australia's Netlinks to bring Starlink. We were talking to its CEO a while ago. SpaceX's revolutionary satellite will be available in the Philippines. Customers across the islands providing stable, high-speed internet. Now, what do you think of this partnership, and how do you think it will affect competition and impact telcos as well as other traditional non-satellite internet service providers?
Actually, it's been one of the headwinds in the telco industry, no? So it just emphasizes or validates that that bearish view on the industry that we have, increased competition, lower margins overall. So it's it's a basic tenet. If there is a disruptor and the disruption makes it more efficient, better, then if you are not able to innovate at the same pace, you're gonna be paying for that price. So we do think that these types of developments warrant or bear closer attention. Although that said, the general positioning on telcos have been quite light across the professional managers' portfolios.
Okay, another corporate story. Rockwell Land expanding to 3 cities outside Metro Manila with development spanning 200 hectares. Now, Rockwell's reporting a 40% increase in net income for 2022. Also earlier, the MCI was reporting a 49% increase in its land banking in Luzon. Now, with interest rates presumably more or less steady, are you finally seeing a recovery in real estate space? I mean, property's been badly beaten in the recent rate hiking frenzy.
That's really one of the things that's frustrating for us. There are some fundamental hurdles that the property segment do need to overcome, particularly on the office segment. So I guess the signaling from the corporates themselves in terms of adding on to land bank really reinforces the view that things are quite cheap within the property sector and for property names themselves. And again, it's the time to be accumulating. We do have preference for some high quality property names, and we have been holding on to our position and even adding in terms of having to rebalance portfolios. And I guess it does signal that these corporates who are on the ground and who are seeing the value on the ground are making decisions that reflect that.
All right, on that note, we thank you so much for joining us again, Sandra Araullo, for your market guidance. Have a good day.
Thank you.
Thank you.